The methodology that we teach can be used in the currency market. It can be used in the stock market. It can be used with futures. You can trade soybeans and live cattle if you want to. Back to the 1 hour, 382 is 180 pips. Hey, what's up, everybody? This is Ryan Carthage, co-founder of the Forex Trade Room, coming back to you with another markup of the AUDNZD. Our mission with this company is to help people become consistently profitable traders. That's it. Our goal is to bring you information, bring you knowledge, bring you insight from the trading space, from the currency markets, even from the stock market. So you'll see stock markups periodically, to help you understand how to see these markets differently, to give you the best opportunities to become consistently profitable. Now, you have to do the work here, but we want to help you take the steps, get you the right information to be able to take those steps toward becoming a consistently profitable trader. So don't forget to like and subscribe. Also share the video, okay? And leave us comments. Let us know what areas in the space that you need assistance with. Mindset, technical analysis, fundamental analysis. Let us know what you need. Also, let us know if you like the content, right? Let us know if you're taking the trades, what your feedback on the trades are. Let's dive in. All right, let's start at the monthly time frame. And what I like to do is just mark out extreme highs and extreme lows, right? So that I can frame out the market to make it simpler to see, right? Understanding that at the end of the day, the market just moves in one big range, right? Just one big range. So after I mark out the extreme highs and extreme lows, we drop in our support and resistance, like so. All right. So we'll get our monthly levels in. I use monthly as black. All right. We'll drop those levels in like so. So Smart Trader is a phenomenal platform, gives us smart tools that allow us to be more efficient in our chart markups. We do a Saturday session every week, 7 a.m. to 9 a.m. With our Inner Circle members. If you want to become a member of the Inner Circle, links in the description below. But we do a session every Saturday with our Inner Circle members, and we are able to get through all of the pairs every weekend so that we can be prepared for the upcoming week, right? Preparation is one of the key pieces to being consistently profitable in the space. All right. So we do that every Saturday to give our members the best opportunity to be consistently profitable and successful in this space. So I marked our support and resistance levels on the monthly time frame. This is a low point, but it is not a swing low. Why is it not a swing low? Because you need two candles to the right to form, right? And we're still in the month of February, so this candle is not complete from a monthly time frame perspective. So this will not be counted as a swing low on the monthly. So we took these levels down to our lower time frames, right? So now we will go to our weekly time frame, zoom out, and we see this overall from a weekly time frame perspective, price has just been moving in this range, right? From 114.860 to 999.78. All right, so it's just been moving in that range. So what we're going to do is we're going to bring in our weekly support and resistance levels, like so. Now, as you're marking these out, I know some people still use TradingView, which is just fine. I'm able to mark out these levels pretty easily because I do use Smart Trader, and it's made pretty easily for me. But you want to ensure that you're marking out the most recent and relevant levels, meaning if those levels have been broken, they are not currently relevant, right? So if price is broken through those levels, right, like a previous resistance level here, right, you wouldn't consider this a current, a recent, and relevant level, right? It does give you an idea from the past on if it's been a support or resistance level, right? And price could react there in the future, but it's not a recent and relevant level, all right? So just keep that in mind as you're doing your markups. So we got our weekly levels in, okay? Now we're going to go down to, we're going to take these levels down to our daily time frame. And we're going to do the same thing, right? The great thing about the methodology that we teach and why we teach it the way that we do and why we've taught it this way for so long is because it gives you a consistent process to follow, right? It gives you a consistent process to follow. You're not changing, you're not deviating. You do the same thing over and over and over again that will ultimately give you a consistent result in the long term, right? And there's folks out there that have been through our program, have worked with us, that are working to teach the same methodology that we do because it's consistent and it works, right? But it came from us. It came from us. So you got our weekly support and resistance levels. Now let's drop down to our daily time frame, right? We took those levels from the weekly, we brought them down to the daily, like so. All right. So now on the daily time frame, we're going to do the exact same thing. Exact same thing. So we'll do our support and our resistance, like so. All right. And we'll zoom in so we can see those levels clearly. And then we'll drop our horizontal lines in using red for our daily time frame. All right. Like so. Okay. Now try to keep these videos as short as possible. If you guys want more insight and if you want longer videos, definitely let me know or let us know. And if you haven't watched some of our live sessions throughout the week, definitely check in. We do live sessions on Tuesday, Wednesday, and Thursday, 6:30 a.m. Eastern Standard Time to 7:30 a.m. Eastern Standard Time, and then 9 p.m. Eastern Standard Time to 10 p.m. Eastern Standard Time. So pre-New York session and Asian session. Come join us, check us out, and get involved in the movement, man. Get involved in the movement. So we got our daily support and resistance levels in. We'll pull out the smart support and resistance, and there we have it, right? Support, resistance, daily, weekly, and monthly levels. So now what we want to do, is take a look at this from a Fibonacci perspective. So we'll zoom out. We'll come back to the bottom of this range, right? And we want to start just mapping our fibs out to see where we get the fibs to completely play out. And this is where it is. So this is our active fib on the daily time frame, okay? And you see, right, we talk about the 80-20 scenario a lot. Forex Trade Room is the home of the 80-20. It's where it started, where it came from. And what it is shallow retracement being anything less than a 38% retracement. And that's what you have here. Shallow retracement. And then the second key piece to this is price pushing into this 118, 127 zone without hitting the D extension, right? So price pushed into the 118, 127 zone, as you see here, right? As you see here. Pushed above, and that's okay. It did not get to your D extension, right? So when you get this scenario, high probability that you get a reversal, right? And we've done back testing, and at the beginning of last year, 2022, myself and my partner, Benny, my partner and my mentor, what we did was we went back to January 5th, the first trading day of 2021. And we did back testing for every currency pair on the 1 hour time frame to see how often this scenario plays out, right? To see how often this scenario plays out. When price gives you anything less than a 38.2, right? Anything less than a 38.2% retracement, pushes into this 118, 127 zone and does not get to that D extension, it gives you a deeper retracement, right? Now, the great thing about this 80-20 scenario is it doesn't matter the time frame, but it also doesn't matter the asset class. The methodology that we teach can be used in the currency market. It can be used in the stock market. It can be used with futures. You can trade soybeans and live cattle if you want to, utilizing the methodology that we teach, right? You can trade crypto and Bitcoin with the methodology that we teach, okay? We have members that do trade a lot of those things. They don't trade live cattle, but you can do it. All right, we've marked up the chart. So when price pushes to that 23.6 level and does not get to the 38.2% level, and then pushes into the 118, 127 zone without getting to the D extension, you get a deeper retracement, right? I'll take the 80% odds, right? I'll take it all day long. So we had an 80-20 scenario play out here. Shallow retracement, 118, 127 zone, and bang, right? Off that move, price went 955 pips to the downside, right? 955 pips to the downside starting in October of last year through December 18th, right? It's a beautiful thing, beautiful thing. So we know that we got a deep retracement here now, right? Price pushed down, gave us a 61.8% retracement. The market took back 61.8% of the original move, that AB boundary, and then we got a reversal. So now price came back, is now testing some previous daily levels, and it's stalling out here. Okay. So we know we have, right, deep retracement, and price has been pushing to the upside here off of our capital fib, right? So another way that we can look at this is taking these fibs out and just looking at our last impulsive move to the upside, which is here, right? Our last impulsive move to the upside. So what we want to do is, in that last move, we want to grab our fib and run the fib from the low to the high, right? And lo and behold, what do we have? Shallow retracement, prices pushing up into the 118, 127 zone, right? We got daily resistance here and a daily resistance level here. Our 118, 127 zone is just above, right? So it'd be beautiful if we get price to push up into that zone like so, and then give us an opportunity to get short, right? Now we'll see what we have on the lower time frame, right? As we get to the 4 hour and the 1 hour time frame to see if we have some confluence to add in to this idea. All right. So flip the fib. We got a potential 80-20 scenario here on the daily time frame, right? With the fibs running to the upside. So now let's move down to the 4 hour, right? Down on the 4 hour time frame. Okay. We zoom out. We got our fibs running same way as we do on that daily time frame, from the bottom to the top. Now, lo and behold, right, we got a D extension here on the 4 hour time frame, right, just above this daily resistance level. We got a 50% retracement. Price is pushing to the matching D extension. So we love, right, I'm going to come back to the daily real quick. We love for price to push into this range. Right? This is that daily 118, 127 zone. Okay. We're going to take this down to our lower time frame so that we can look at the confirmation and the confluence that we have from all of our time frames. All right. So we're going to link this down also to our lower time frame. Okay. So when we come to the 4, this is what we have. Right? We got a D extension. We're going to mark this out. This is our daily 1.18-1.27. Right, our daily 118, 127 zone. Bang. Okay. Inside that box, we got our 4 hour D extension right here. Okay. So what we love to see, just like we said on the daily, price to push into this zone, right? Maybe push a little bit higher into that 118, 127 zone, and then see if we get an opportunity to get short. Right? That's how this game is played. That's how this game is played, right? But also in this, that's what we're looking for. But what also did we have in the past, right? We had a 80-20 scenario, right? Less than a 382 off the B boundary. Price pushed into the 118, 127 zone. And then it gave us a deeper retracement. And the cycle continues, right? Regardless of the time frame, this is the play. This is the opportunity, right, That's consistent. That's consistent, right? This is the opportunity that's consistent. So that's what we have. That's what we have, right? So we're looking at price turning over and pressing to the downside. Okay. We want to see price one more push to the upside to get us into that 118 and 127 zone. Okay. So the reason this is called the 80-20 scenario is because it plays out 78.6% of the time, right? The other 20%, price will run to the D extension, right? So we're not telling you that you're going to win every trade because you won't. It's not realistic, right? But with the proper mindset, proper understanding of how the market moves, you can be consistently profitable. And that's the key over the long term, is to be consistently profitable. So that's why we like this. That's why we love this scenario, man, because we've done the work. We've done the testing, right? We've done the testing. We've personally seen it play out, right? So now it's time to take action, execute on this 80-20 scenario, all right? So we want to see price push into this 118 and 127 zone and then turn over and get short, okay? That's where we are on the 4-hour time frame, all right? So let's drop down to take that down to our 1 hour as well. All right, so here on the 1 hour time frame, right, we brought our 118, 127 off the daily, that zone down, right? We have our 4-hour D extension, which is this thick red line. All right, so now on the 1 hour, we want to run our fib from the low to the high, like so. And what do we have? Exactly, 80-20 scenario, right? We have a shallow retracement, did not get to that 38.2%, right? And prices hovering in this 118, 127 zone, right? Hovering in that 118, 127 zone. Now, even if price pushes to that 4-hour D extension, and then even if price pushes into that daily 118, 127 zone, still may not hit that D extension, right? Still considered an 80-20. So what we're looking for is price to move to the upside here, come into the zone, and then give us an opportunity to get short, right? That's how it works. That's how the cycle works. That's how it moves. So that's what we're looking for, right? I know I got a bunch of boxes here, right? But this is the zone that we're looking for price to push into, right? We're in the 118 and 127 zone on the 1. We want a 4-hour D extension to be hit. And we'd love for price to push into that daily 118 and 127 zone as well, right? And this is going to be a longer term swing trade, right? It won't be something that you'll be able to be in and out of real quick. This will be a longer term swing trade that will give you an opportunity to make a decent amount of pips over the long term, right? Back to the 1 hour, 382 is 180 pips, right? On the daily time frame, you got even more potential. All right. So that's what we're looking for here. Now, there's a couple ways that you can look to, excuse my bouncing around there, a couple ways you can look to enter the trade, right? We teach our team members how to use the Ichimoku cloud, right? Ichimoku meaning at a glance. At a glance, where is the trade, right? So what I use is the Ichimoku cloud, what we teach our team members, how to use the Ichimoku cloud. Benny does a phenomenal training on the cloud, what each of the lines mean, how it actually works. But we want to see a break of the cloud to the downside, right? So I'd love to see, again, price push up into the zone and have the cloud also move up with price, and then see a break of the cloud to get short, right? We'll do some training on that. We'll do some videos on that if you guys are interested. Drop your thoughts in the chat if you want to know how to use that Ichimoku cloud. But, right, you can use trend lines. Right. And I know people say trend lines are subjective and all of this, but it's not true. You just have to understand how to draw trend lines. Right. And how you draw the trend line is simply you start at your lowest point. Right. And you extend that line out like a table. Right. And you bring it up until you get a second touch of your trend line, which is here. Okay. Right. Now, just like your kitchen table, you don't want any legs to come through that table, right? It'd be weird, just like a trend line. You don't want any legs to come through that table because that's price action on a lower time frame, right? So you want to ensure that you have no legs, no wicks, no candles coming through the trend line, right? Go to that next touch, and that's where you stop, right? So there's your trend line to the upside, okay? Now, as price continues to push to the upside, you'll have inner trend lines, which you'll start that inner trend line here, right, and come to the upside, okay, like so. There's that inner trend line there. And then as price continues to push, right, if price pushes into our zone up here, you'll have another more aggressive trend line coming up like that. Okay. So now you got your trend lines, and what you want to see is a bearish break of your trend line, a bearish engulfing candle breaking your trend line. And what that would look like is like this, right? You want a nice bearish engulfing candle, break of the trend line. Okay. You don't want price to move sideways and consolidate through your trend line, right? You want a firm confirmation that the trend is changing, right? That's what the trend line break tells you, right? When the trend line gets broken, that is a point of confirmation that the direction and the momentum of the market is shifting, right? And it's changing direction. The trend has broken when the trend line gets broken, right? Trend line tells you direction, momentum of the market. And it tells you when that changes. Okay. But you got to know how to draw it right. So there's your trend lines. That you can use that as an entry confirmation as well, that the trend is moving and you can enter that trade to the downside. So within the inner circle, we teach all of these details in our training, right? And in our live sessions, we're able to answer those questions for you as you're marking up the charts, as you're doing the homework that comes with the training, right? We're able to answer those questions, look at your charts, give you feedback on where you are to help you continue to make those steps to becoming consistently profitable traders. That's our mission with this company. All right. So this is my outlook on the AUDNZD. Looking for price to get short. Those are your entry techniques. That's how you can move through the scenario. Be patient. Don't rush it. Allow price to move into your zone. The other thing that's important in this trading space is making sure that you have rules, right? We have rules that we follow. In the inner circle, we talk about them. If you like the video, you want to see more, you want to learn more, like and subscribe. Also share if you know somebody that's interested in learning this market and really learning how the market moves, right? Also, if you want to become part of the inner circle, click the link in the description. Come join us. Come join us. We meet Tuesday, Wednesday, Thursday. We do those sessions live on YouTube as well. 6:30 a.m. Eastern Standard Time to 7:30 a.m. Eastern Standard Time for the pre-New York session. And then in the evening, 9 p.m. to 10 p.m. Eastern Standard Time for the Asian session, right? But we also do, just exclusively for our Inner Circle members, we have a Mindset Monday session every Monday morning at 6:30 a.m. where we talk about all things mindset, personal development, and growth, because we believe the better person you become, the better trader you will become. Right? It's bigger than just these charts. We want to help people. We want to impact people's lives in a great way. Right? But we also then do a Saturday ritual where we spend 2.5 to 3 hours working through every currency pair to see where it is in the market, talk about it fundamentally, talk about it technically, to prepare for the upcoming week. So that as we move through the next week, we're just allowing the trades to come to us, and we're not searching for a trade. We already know what we're looking for before the market's even open, right? So if you want to join us in the inner circle, click the link in the description. Come join us. We'd love to have you be a part of the family. So until next time, my friends, be legendary. Peace.